Testing AI for stock market predictions was a fascinating experiment that delved into the capabilities and limitations of artificial intelligence in the realm of finance. The process began by setting up an AI model using extensive historical stock market data. This data included stock prices, trading volumes, economic indicators, and even news sentiment. The goal was to train the AI to identify patterns and make predictions about future stock prices. Once the AI model was trained, the next step was to test its predictions against real-time market data. Each day, the AI would predict the stock prices for a selection of companies, and these predictions were then compared to the actual market performance. Over the course of a week, the AI's predictions were monitored and analyzed to evaluate their accuracy. The results were intriguing. The AI correctly predicted several market trends, showcasing its potential as a valuable tool for investors. For instance, it identified a notable upward trend in a tech stock, aligning closely with the actual market movement. This indicated that AI could indeed provide insights that might not be immediately evident to human analysts. The AI's ability to process and analyze vast amounts of data quickly allowed it to spot trends and patterns that could be easily overlooked by humans. However, it wasn't all smooth sailing. The experiment also highlighted the limitations of AI in predicting the stock market. The stock market is influenced by a multitude of unpredictable factors, such as geopolitical events, economic shifts, and investor sentiment. During the experiment, there were instances where the AI's predictions did not align with the actual market behavior due to sudden market volatility triggered by unexpected news. This underscored the fact that AI, despite its advanced capabilities, cannot fully account for the nuances of human-driven market dynamics. Moreover, the AI sometimes struggled with the complexity of certain market scenarios. For example, during periods of high volatility, the AI's predictions became less accurate, demonstrating that while AI can enhance decision-making, it is not infallible. These discrepancies highlighted the importance of human oversight and judgment when using AI for stock market predictions. The experiment reinforced the idea that AI should be used as a supplementary tool rather than a replacement for human expertise. While AI can provide valuable insights and improve the accuracy of predictions, it should be integrated with human intuition and experience. Investors can benefit from using AI to identify potential opportunities and risks, but they should always rely on their own knowledge and judgment when making final decisions. In conclusion, the experiment highlighted the promising potential of AI in finance. AI's ability to process large datasets and identify patterns makes it a powerful tool for stock market analysis. However, the unpredictable nature of the stock market means that human expertise remains crucial. The future of stock trading may well involve a symbiotic relationship between AI technology and human judgment, leading to smarter and more informed investment strategies. By leveraging the strengths of both AI and human intelligence, investors can navigate the complexities of the stock market more effectively and make better informed decisions.